Welcome to Technovation. I'm your host, Peter High. My guest today is Steve Case. Steve co-founded AOL in 1985, and that company would become a foundational organization of the internet age. AOL was the first internet company to go public and one of the best performing stocks of the 1990s. At its peak, nearly half of internet users in the US used AOL. In 2000, Steve negotiated the largest merger in business history, bringing together AOL and Time Warner in a transaction that gave AOL shareholders a majority stake in the combined company. For the past 15 years, Steve has led Revolution, a Washington, D.C.-based investment firm that now backs entrepreneurs at every stage of their development. Revolution Growth has invested in nearly $1 billion in growth stage companies, including organizations like Sweetgreen, Tempest, Tala, DraftKings, and Clear. He's particularly passionate about funding companies outside of the traditional VC epicenters of California, Massachusetts, and New York. And he has a fund and a book, both called The Rise of the Rest. The book came out just a couple of months ago in late 2022. Steve, welcome back to Technovation. It's great to speak with you again.
Great to be with you again.
Well, I thought let's begin, if you don't mind, Steve, with just sort of some foundational items that you address in the book itself. First of all, even today, 75% of VC goes to 3 states, and actually a large majority of that really to 3 cities in those 3 states, or 3, I should say, metropolitan areas in those 3 states, the Bay Area, New York City, and Boston, and the metroplexes around them. First of all, how did that come to pass? Why did those 3 areas come to dominate so much? And then, of course, I'd love to get into some of your the thesis behind your book around some of what might perhaps pry loose some of that venture capital into some other states as well.
Well, first, I think it's worth pointing out that venture capital as sort of a strategy, almost an asset class, is a relatively recent phenomenon. It started a little over a half century ago. Initially started in New York and Boston and San Francisco. And so you started seeing some clustering around there. And then the successes of certain companies led to other companies starting, creating kind of this increasing returns network effect dynamic, which it led those 3, as you say, really metropolitan areas to really become so dominant. And good for them. Obviously, a lot of great companies are starting and scaling in those cities. But it is remarkable that we have this big country and dozens of other cities, but most of the venture capital has still been concentrated in those 3. As a result, one of the things, and I did write about this in the book, is there's a brain drain from different parts of the country where people feel like they kind of have to leave to go to one of those, kind of hubs if they really want to participate in sort of the innovation economy, the startup sector. And that just strengthens those cities, but disadvantages the other cities in the middle of the country. That started to change in the last decade. I think the pandemic was definitely an accelerator, sort of a tipping point. But there's still a lot of work to do to really make sure everybody everywhere, they have an idea, they have the opportunity to start a company, create jobs, and really renew their communities.
And how did the idea come to you and to your colleagues, the notion of the rise of the rest? The reason for it is clear, right? You alluded to it, in fact, in your response there, that no one part or no 3 parts of the country should dominate when it comes to innovation and opportunity. So counterbalancing that, or at least creating better balance around the country, is certainly a worthy area to attempt to tackle. Why you? Why was this an area that you were so passionate about?
Well, I sort of stumbled into this. This found me. It started a little over a decade ago when I was asked to co-chair something called the National Advisory Council on Innovation and Entrepreneurship. And that led to some recommendations, one of which was that the White House, then President Obama, launched an effort called Startup America. And they did, and he asked me to chair that. And then I worked on his Jobs and Competitiveness Council, leading some of the efforts, particularly around entrepreneurship innovation. And so all those things, and even though they were a little more policy focused, opened my eyes to the one point we just talked about, the fact that 75% of capital goes to just 3 states. And the second was how central new companies, startups, were in terms of job creation. I didn't fully understand it, but the data is that small business accounts for a lot of jobs, but as a sector doesn't grow a lot of jobs. A restaurant goes out of business, gets replaced by another restaurant, will hire about the same number of people. And big business, Fortune 500, as a sector doesn't account for a lot of net job growth either, because there are some companies growing rapidly like an Amazon, but there are also some companies declining like Kmart and Sears and others over the last couple of decades. So if you add up all the increases and all the decreases, it ends up as a sector not really being a net job creator. So it's the new businesses, companies under 5 years old, that are the major job creators. So once I realized that, and then you connect it to the idea that venture capital is only going to, or dominantly going to just three places, you say, well, there's a problem there that needs some attention, but it's also an opportunity. And that led us to start launching our Rise the Rest bus tours over 8 years ago, and then led to launching the Rise the Rest Fund about 5 years ago, and more recently led to writing the book, because after spending better part of the decade traveling around, visiting hundreds and hundreds of companies in dozens and dozens of cities, I just found these stories remarkable. But when I'd come back and talk to people about it, people had no idea what was happening in most of these cities. And I just felt like, it was time to tell those stories.
Yeah, really fantastic and incredibly inspiring stories you tell so nicely in your latest book. I wanted to ask you, as you contemplated the bus tour and engaging different cities and entrepreneurs in those cities more specifically, on top of having diagnosed what has worked well in those areas where investment has flowed, I wonder how you thought about the sequence of events that would make this sticky in a place. It's all well and good to get on a bus and to create some attention and to identify some people who are willing to take some risks and have some good ideas and give them some capital and so forth. But how have you thought about the engagement of government, the role that universities in those cities play, the other sorts of structural advancement that could stimulate this such that it would be lasting as opposed to ephemeral?
No, I totally agree. And our team, before we would go to a city, would spend 6+ months doing research, visiting, advancing the city, meeting people, including exactly the people you're talking about, the mayors, the university presidents, some of the CEOs of some of the big companies, as well as obviously some of the entrepreneurs. And we're just trying to understand what some of the dynamics were. And in almost every case, we saw an opportunity to drive more collaboration in the community. That interesting people were doing interesting things, but they weren't as collaborative as we thought they needed to be to really have dramatic and sustainable impact. So that's been one of the messages when we're visiting a city. We try to connect people to each other and make sure people understand what everybody's doing and can work together in a much more collaborative, kind of integrated kind of way, so that it does create more sustainable change. And then after we leave, we obviously stay closely connected to all those different constituencies, so we can really have a sense that we're really making an impact over the long run. It's not just a one-off visit to a city. It's the work before we get there, as well as what we're doing when we're there, but most importantly, in the years after we visit.
Yeah, very interesting. And where did the idea to travel by bus come from? Talk a bit about the genesis of that idea and the rationale in doing it in that way.
Well, actually, when it's into the Startup America partnership that I was sharing, we had launched essentially different chapters in different states around the country, and they all were doing different things. And actually, the Startup Maryland group did a bus in Maryland to shine a spotlight on what was happening in different startup cities within that particular state. And we said, well, that seems like a good idea. Why don't we do that? But rather than just limit it to one state, why don't we do it all across the country? So we launched our first those Rise the Rest bus tours 8 years ago. Went to Detroit, Pittsburgh, Cincinnati, Nashville. And when we were doing the first one, frankly, we didn't know exactly what we're getting into. We thought it'd be an interesting experiment. But once we were there, we realized something was bubbling, and that the way we could shine a spotlight on the cities and the entrepreneurs in those cities was constructive. And some of the things we talked about around driving more collaboration were also kind of helpful. So then we continue to, now we've done these bus tours in dozens of cities, and our Rise the Rest Fund is now invested in over 200 companies in more than 100 cities. So it really is a very broad-based effort, and we do that in partnership with over 300 regional venture firms. So a lot of it's about building networks. Not that different than the early days of AOL and the internet. We were about building networks then to stand up the internet, to build the on-ramps to the internet, to create the reason why people wanted to be on the internet. The focus around Rise the Rest is similarly focused around building networks, but this is more to level the playing field so people with ideas have an opportunity to start and scale companies wherever they happen to live.
Very interesting. And talk a bit about the VCs that you would partner with. So I think to some at least they might be surprised that there are so many on the other end of the cities that you were visiting, who would be there to provide some of that foundation. How did you find them? Talk a bit about, obviously these would presumably be less than brand names among those who might be familiar with the venture capital community. You talk a bit about those partnerships and what you're seeing in terms of the venture space in non-traditional places.
Well, one of the things that was super encouraging, we did a report with PitchBook last year called Beyond Silicon Valley. And one of the findings was in the last decade, 1,400 new venture firms have started in Rise of the Rest cities, cities outside of San Francisco, New York City, Boston, the three tech hubs we talked about. 1,400. So now there are venture capital firms in most cities in the country. That was not true 10 years ago. So that's another kind of surprise to people. And so we've been identifying who in each city are really the leaders in those cities and trying to establish relationships with them, whether we're visiting by bus or not. A lot of most of our investments have come, nothing to do with being on a bus. They've come from the network we built and the relationships with these hundreds of different venture firms. And in terms of branding, it's fair to say they're generally not as well known as the iconic Silicon Valley brands, a Sequoia or Kleiner Perkins or Benchmark or Andreessen or others. But in those cities, they're actually quite well known. And sometimes in some of these Ride the Rest cities, they're better known than some of those Silicon Valley investors because the entrepreneurs in those cities don't necessarily have connections to those Silicon Valley investors. So it's been bubbling over the last decade. I think it really bodes well because as these venture firms launch initial funds, which tend to be modestly sized initial kind of first time funds, and have success, they're able to raise larger successor funds, and over time that means more capital is going into the entrepreneurs in those particular regions of the country. And then it gets to the later stage. It's there's that seed stage, and then the venture stage, and then the growth stage. As it gets into that later growth stage, the coastal investors do tend to pay more attention. But at the earliest stage, the seed stage, and even to a large extent at the venture stage, it really is helpful to have regional venture firms kind of taking the lead with companies in their geographies.
When you do the bus tour, which you've been doing for most of the past decade, talk a bit about the sequence of events, like what you do. And I realize, of course, as you pointed out earlier, there's a lot of pre-work that happens. So it's not as though that's the first time any representative from Revolution is rolling into town. But talk a bit about how you structure the time when you do visit one of the cities like the ones you've mentioned.
Well, it's a pretty full day. It's pretty busy. We get up early and have a breakfast, inviting community leaders, CEOs, mayors, people like that to join us and start talking about some of the challenges that particular city has as it relates to startup, but also some of the things that are going well and opportunities to build on some of those strengths. And then we load up the bus and we pack it pretty tightly, and we start doing a we call a startup crawl through the city, stopping at various companies or accelerators or incubators or universities, and a lot of different things that we include in that. Then we have a lunch session again that brings a lot of different people together, because it goes back to this point I made earlier about the importance of connecting people and driving more collaboration. And then in the afternoon, usually do some press interviews with the local media in particular. Sometimes we have national media with us. A few years ago, 60 Minutes joined us for one of the tours and ended up doing a story on it. And that's a way to spotlight these cities and spotlight these entrepreneurs and help get them more visibility, both locally and nationally. And then we do a pitch competition. And we before we come, we announce we're coming. And typically around 100 startups apply to pitch. We pick the top 8 or 10 to be on stage. We hire a pitch coach to help each of them create a tight presentation to really sell their vision and sell why they should be the winner of that pitch competition. We have a team of local judges, as well as some folks, and obviously me and other people on our team are part of as well. And then we decide which of the companies is most promising, and we invest $100,000 in that company. But usually what happens is others then want to also invest in those companies. And often we end up investing in more than one, and others in the audience also end up backing more companies. And so it's a way to catalyze not just one winner, but there's multiple winners, because they're all getting the benefit of that visibility. And sometimes that gives them access to capital they otherwise wouldn't have. And then we end it with a big kind of party celebrating what's happening in that city. And then we get on the bus and drive to the next city. So that's how the tours generally have been organized.
That's fantastic. I appreciate that overview. You talk about, and it's certainly a thread so far in all of our conversation, is this importance of partnership. You are a legendary tech entrepreneur yourself. So not surprisingly, a lot of the companies, if not most of the companies you're investing in, have technology as a backbone. But you mentioned how technology is the table stake, and it's partnerships around technology that really determine the success or lack thereof of an organization, of an entrepreneurial venture. And we've talked about the necessity for partnerships with universities, with cities, with venture capital, et cetera. You also talk about some of the advantages that certain geographies have industry-wise, like, for example, healthcare in Minnesota with the Mayo Clinic and United Health Group, both being in that state, among others that you provide examples of. Talk a bit about, as you think about those partnerships, other ways in which you've thought about developing a kuretsu or an ecosystem that favors certain ventures in certain industries that they're focused on.
Yeah, a bunch of really important ideas there. The first is we definitely believe in the power of partnerships, the power of networks, and even this African proverb that I love: if you want to go quickly, you can go alone, but if you want to go far, you must go together. That really drives a lot of our work. And it was essential in the early days of the internet. When we started AOL in 1985, only 3% of people are online. Those 3% were online an average of 1 hour a week. Most people didn't see the reason to be online, and it required partners. We have over 200 partnerships at AOL to really, ultimately be successful. Without those partnerships, we never would have survived, let alone thrive. So I saw firsthand the value of those partnerships, and we've seen that in other things we've done over the years. So we brought that bias to what we were doing with Rise of the Rest. And building on the other point you made, it's super important is that the cities in these Rise of the Rest cities have some natural advantages and industries that have deep roots in those communities, and that's going to become more important as this next phase of companies do recognize that partnerships are important. We've gotten in the early days of the internet, I said partnerships are very important. In the last 20 years, they were less important. Some of the most iconic companies, Facebook and Google and others, didn't really have partnerships. They just launched an app or a service. It caught on, spread virally, and suddenly they were a significant company. Partnerships are going to be very important in healthcare, very important in food and agriculture, very important in many of the sectors up for grabs. And I think having expertise in those industries and connections in those industries and credibility in those industries will advantage you as an entrepreneur, and being closer to those companies in terms of where you're located likely will also advantage you. So that's why there's an opportunity in these Rise of the Rest cities to really accelerate the growth of the startup hubs in those cities, focused on some of these big industries that are now up for grabs in terms of being reimagined.
That's very interesting. I couldn't help you tell great stories across the book of the cities you visited and your experiences there, and examples of what's brewing in those places. It brought to mind that this is sort of the antidote to that famous New Yorker comic where you have the New Yorker's point of view of what the U.S. is like, and it's basically New York City, and then in California, and nothing in between. And you're pulling the country apart to make sure that people are seeing all the different nooks and crannies and the special things that are happening across the U.S. I wonder, as I say, there are so many great stories you tell across a variety of cities that you visit, many cities that you visited, and as you mentioned, 100 that you've invested in, cities that is represented among your investments. I wonder if you could share a couple of your favorite stories of places you visited and success stories associated with this.
Well, I could go on for hours on this, and that's ultimately why I wrote the book. But I'll give you a few. In Atlanta, there's a company called Hermeus that spun out of Georgia Tech that's focused on Mach 5 engines and planes. So you get from Atlanta to Europe in 90 minutes. The Air Force is a really big customer of theirs, because the Air Force obviously likes to move things quickly. And they're benefiting from the Atlanta being an aerospace hub and Georgia Tech having tremendous expertise in that particular sector. So that's an example. When you talk about a company like that, people would probably assume it's in Silicon Valley, would be surprised it's in Atlanta. There's a company in Chattanooga, Tennessee called Freightwaves that developed a data platform, almost like a Bloomberg system for the trucking and logistics industry. And I didn't know this till we were in Chattanooga on our Rise to Rest bus, but most of the big trucking companies in America are headquartered in Chattanooga. So we're building Bloomberg for trucking. Better to be in Chattanooga than New York City or San Francisco, because they're building on that expertise and able to capitalize on that. Another great story is there was a guy who was working in San Francisco at the time for a hedge fund in San Francisco, Carter Malloy, and decided to start a company called Acre Trader, which essentially is a platform to allow people to invest in farmland, which would allow the investors to diversify and also allow farmers to get capital to grow. And he said, if I'm going to create this platform, the first step is getting farmers to believe in me, get farmers to trust me. So he moved back home to Arkansas. He was from Arkansas and started Acre Trader in Fayetteville, Arkansas, and that scaled quite dramatically. So that's another example of the value of place, the advantage of place. And sometimes it ends up being sort of serendipitous or maybe accidental. There's a founder, Megan Glover, outside of Indianapolis, that 5-6 years ago was concerned about water quality. At the time, there was this big crisis around Flint, Michigan, and their issues with water safety. And so she called her water company and said, "I want to get my water tested." And they said, "Well, we actually don't do that for individual consumers." And she was really shocked by that and decided to start a company called 120 Water to provide a kit for consumers that was affordable and convenient. And now it's even expanded to provide that service to cities, including cities like San Francisco. So that was a case of entrepreneurs seeing a problem and deciding to do something about it by creating a company. And probably because Indianapolis was not that far from Flint, Michigan, she was more likely to be thinking about that than if she had been in Silicon Valley or some other place. So those are a few of the story. There are dozens others in the book, but all of them have what unites them is they're interesting entrepreneurs tackling interesting problems that they see as being interesting, compelling opportunities to build companies. And they see the place where they are or the place where they choose to move to as an advantage as opposed to a disadvantage.
Very interesting. Well, and you, of course, are an entrepreneur at heart yourself, somebody who has been a very successful entrepreneur, to say the least. And I wonder, especially as somebody who's lived that life, what do you look for as the ingredients of a successful entrepreneur? There are a number of, obviously, many different companies you review and you invest in a select few. What are some of the differentiating factors of the leadership teams that you look for that excite you enough to make an investment?
Well, because you said this in the introduction, because at Revolution we have the Rise to Rest Seed Fund as well as Revolution Ventures and the later stage Revolution Growth Fund. We think about the answer to that question differently at those different stages. Obviously, the later stage are real businesses that have been around for a bunch of years, have really built significant teams, and the question there is how big can they be, and with an infusion of capital, maybe some additional partnerships, can they really accelerate their growth and capture more market share? Conversely, at the really early seed stage, which is what we're focused on with Rise to Rest, these are companies that are just emerging. So the set of questions we ask are a little bit different. One is an obvious one, but what problem are you trying to solve? What is the big idea? What is sort of why is this something important? Why is this a company that has the potential to be significant over time? So just getting clarity on kind of, is it a battle worth fighting? Is it a mountain worth climbing is the first step. Then it quickly goes to the team, not just the entrepreneur, by the way, but the team, because we've learned that entrepreneurship is a team sport. So depending on what you're tackling, whether it's healthcare or financial service, what have you, you have some people that bring some fresh insights, fresh perspectives, but also complement that with people who have some expertise in the sector and some credibility in the sector. So you have the right mix of talent on that team to really take that idea and scale it. And also, we're just looking for, even though it may be early days, some evidence that there really is product market fit. There's something about how you've decided to turn your idea into a product, into a service that's starting to get some traction. The last one goes back to the earlier point we talked about, is are there partnerships that you form that really could be pivotal in terms of accelerating your growth? Or do you have an idea, a theory of the case of which partnerships, if you could form them, really could result in you achieving significant scale and significant success? So those are some of the things that we're looking at that early stage.
That's really interesting. A couple of years ago, I interviewed Bill Peduto, the former mayor of Pittsburgh, who you probably have met, I'm sure, along your travels. And he shared some really fascinating anecdotes about the evolution of that city. And I remember he shared an anecdote that in 1979 the Steelers won the Super Bowl and the Pirates won the World Series, and the city rather almost went bankrupt. But due to great governance at the time, he was of course not the mayor back then, but a succession of really forward-thinking mayors. They recognized the ingredients they had, the special attributes, whether it's Carnegie Mellon as a great university, a city that was used to building things. And so thinking about, hardware as perhaps a part of the technology that they could be particularly well suited to. And of course, then having putting necessary ingredients in place to provide incentives for entrepreneurs to live their entrepreneurial dreams in that city. You've met with, as you mentioned before, and a lot of this work happening before your tours commence, government officials in various cities. Talk about the role that local government plays. People always say that in some ways that's the most influential of all government, because it can be it's a little bit more of a speedboat relative to the freighter, the oil tanker that is the federal government. Talk about some of what you've seen as positive aspects of what city leaders can do in order to stimulate this.
Well, first, at Pittsburgh, it's interesting you mentioned that, because that was the second city we visited on our first Rise of Res tour. The first city was Detroit, and both of them were interesting because they were iconic cities that a century ago really were, in some ways, the Silicon Valley of their time. Detroit, when the auto was the hot technology of the day. Pittsburgh, obviously, kind of with the steel industry, kind of powering the Industrial Revolution. So they really were dominant cities, but had fallen into some decline in the last half century. The difference between the two, as you just stated, was Pittsburgh several decades ago recognized they were in this decline and worked together in a collaborative way to build on some of their assets, including some of the industries, and as you mentioned, Carnegie Mellon, and had more momentum. Detroit did not do that until about 10 years ago and fell into decline. Actually lost 60% of its population in a half a century. And the year before we rolled in on our Rise Red bus, the city of Detroit went bankrupt. So it shows you from 100 years ago being this dominant, kind of tech hub to being bankrupt. But the great thing, what's happened in the past decade, we backed a number of companies, there's StockX and Shinola and GuardHat and others. It's now really scaling nicely. I was just in Detroit a couple of weeks ago as part of this book tour, and a city that 10 years ago, a downtown area that was largely vacant, is now largely full, and there's a vitality now that's happening. So it shows you how these things can change in relatively quickly. And the other part of your question is we have visited now with a lot of mayors, a lot of governors, talked to a lot of senators and members of the House. And it's good to see the progression over the last decade of people focusing on the role that startups play in revitalizing communities, creating jobs, driving economic growth. When we got started 10 years ago, most of the attention was on economic development through the prism of big companies, trying to lure a big company to move their headquarters or a big company to open a factory. And there's always going to be some aspect of that is going to get attention. But in recent years, there's been more and more focus on launching new companies, some of which have the potential to be big companies, and trying to figure out how to build on some of the unique assets of that particular city or region, including the universities there, including some of the big legacy companies there. How do you win the battle for talent so you don't have people leaving your city, you have people moving to your city? How do you win the battle for capital so more venture capitalists, both locally and around the country, are paying attention to what's happening in the cities? How do you drive more of that collaboration we talked about before? All those things are things that the mayors and governors are doing, generally speaking, are doing a much better job on now than they were 10 years ago. And it's promising as we think about this next decade.
Yeah, really interesting examples and the profound role that they can play. I thought it was also interesting, in addition to highlighting greater geographic diversity, you develop a number of stories that also highlight entrepreneurs that are diverse in other ways, much more so than the time when you started a company, when most entrepreneurs were male and most were white. Talk a bit about what you see as progress that has been made in terms of a greater level of diversity, whether that's gender diversity or ethnicity, et cetera, race and so forth. The progress you're seeing in terms of having a more diverse array of entrepreneurs that are driving the growth you've described.
Well, I will talk about some of the positives, but first, just set the table with focusing on some of the challenges, some of the negatives, which is, I think, should be a wake-up call to everybody. Women are 50% of our population. Female founders get less than 10% of venture capital. Latinos are 18% of our population. Latino founders get less than 2% of venture capital. And Black Americans are 13% of our population. Black founders get less than 1% of venture capital. So this issue of leveling the playing field, not just around place, which was where we started with Rise of Rest, it's also evolved to be around people and trying to back a diverse array of entrepreneurs. Some of the cities in these Rise of Rest cities do tend to be more diverse, so that's helpful. But our team has also been very intentional when we're visiting a city. Where do we go? Who's pitching on stage? How do we connect to different networks in those cities to have the broadest possible connectivity to entrepreneurs and their ideas. And as a result, our Rise of Rest fund is doing better than most venture funds. Over 40% of our investments are female founders or founders of color, but it's still not anywhere where what it needs to be. So there needs to be much more intentionality so that you really are not just backing certain kinds of people in certain kinds of places, but you're opening up your mind, opening up your aperture, opening up your on-ramp in terms of deal flow to a wide range of people in a wide range of places. So a little bit more attention on that now than we saw before, but there's still, frankly, a lot of work to be done in the next few years to really change that dynamic and really level the playing field in all these different respects.
Yeah, very interesting. You alluded also earlier, Steve, to the pandemic as an accelerator and how it's changed in some ways, of course, where work is done. There's potentially an argument, some have certainly argued it, in fact, that the necessity of place, especially in a scenario where more people are working virtually and more people are primarily working virtually, becomes less important. There's, of course, a lot of people who would argue the opposite as well. I wonder your own perspective. How have you seen the pandemic change things or not change things in terms of what the necessary ingredients to help founders, help companies grow to become successful businesses? What are some of your insights there?
I think the pandemic has been a shake the snow globe moment for the world. And we were all forced to quickly hunker down. Those who were not familiar with Zoom and other conferencing technology suddenly had to embrace it because that was the only way to connect to people, the only way to continue to operate, whether irrespective of what you were doing. And while it was a sudden, sort of abrupt adjustment, generally people found it worked pretty well, and generally people found it gave them some flexibility that they previously didn't, really understand they could pursue, whether it be for individuals or for organizations. Now we've moved into a phase which is, I wouldn't necessarily call it post-pandemic, but is a different phase, or where we're trying to adjust in terms of what should work be. I don't think there would be that many companies that are going back to what it was before, 5 days in the office. There also won't be that many companies that are fully remote or remote only companies. We back some, but it's not the majority. Most will be somewhere in the middle that are operating with some version of hybrid, where there's some remote work and some in-person work. And everybody's figuring this out, and it kind of depends on the stage of the company and what your challenges are, what opportunities you're pursuing in terms of what the right mix is. But it has been a real unlock in terms of the sense that you had to be in a place like a Silicon Valley in order to be part of the innovation economy. Now you do have more flexibility in terms of where you want to work, and whether it's kind of a few days or more frequently than that. I think that's going to be helpful. We also saw during the last 2 or 3 years a dispersion of talent. Some of the people that left certain places decided to return. So we're seeing a slowing of the brain drain and an acceleration of the boomerang of talent. That's been positive. The other thing that's been positive is historically venture capitalists in places like Silicon Valley said to entrepreneurs, if you want to get our money, you have to come to us and pitch to us in person in our office. Well, they couldn't do that anymore. They too had to embrace Zoom. And once they were doing pitch meetings by Zoom, it dawned on them after a few weeks that they also could be connecting to entrepreneurs anywhere in the country, perhaps anywhere in the world via Zoom. So that expanded their aperture and did lead to some firms that had traditionally only invested in certain places to invest more broadly. So it's been interesting to see how this plays out. It's, I think, going to take a few more years for it to settle out, but I think it will be a net positive in terms of some of these dynamics around the rise of the rest.
As we're having this conversation, it appears as though there are economic headwinds ahead of us, and a number of dynamics, exogenous factors that will determine the success or lack thereof, especially for venture-backed organizations that are, sort of clawing their way to developing successful pathways for themselves. I wonder how, as you think about, the economic headwinds, the inflation, the downstream impacts of the war on Ukraine. Not that I'm asking you to comment on all the above, but just the fact that there are all these sort of black swan events that are happening at once. How that has you thinking about how to invest, the pace of investment, what might have changed in recent months as a result of all these exogenous factors.
Well, since I've been at this for a while, a few decades, I've lived through a number of cycles, including the dot-com boom, where our company went public in 1992, and the market value was $70 million, and 8 years later is $160 billion. And then after things crashed and declined precipitously. So I've seen a few of these cycles. And I actually was surprised a year or two ago how strong the public markets were, how the valuations of the late stage private companies did strike me as a little frothy. And so I wasn't frankly surprised when there was a correction. It had been a 13 plus year bull market run, and at some point it was going to turn. So that's not a big surprise. What's happening right now, based on what we can see, is a couple of dynamics. One is the entrepreneurs in places like Silicon Valley that kind of got used to being able to raise pretty much however much money they wanted to raise, and always at a pretty good valuation, an up round versus the previous valuations. It's been a pretty brutal kind of wake up call for them, because they've had to quickly adjust and because they had less of a path to raise additional capital, often had to cut back in terms of their expenditures, team, things like that. There was some of that for sure in other parts of the country, but a little less of it, because entrepreneurs in these rise of rest cities always had trouble raising capital, always had to kind of settle for a more reasonable valuation, and always therefore had more of a bootstrap mentality. We're more capital efficient. And so for them, it's been a little less abrupt in terms of the reset. That's not to say they don't have some challenges, but because when the economy moves like this, everybody has some challenges. But on a relative basis, it's a different set of challenges. And the other point I'd make is and we're already seeing this with some of the bigger companies, when times get a little tougher and people need to tighten, or feel they need to tighten things up, maybe revenues are softer and they need to tighten some of their spending, often the first thing to cut, or one of the first things to cut, are the long-term innovation initiatives that they think make sense, but they're not sure about, and will take at least 5, sometimes 10 years to pay off. Those are generally easy things to cut when you have to look for things to cut. As a result, when that happens, and that likely will accelerate in the next couple of years, that creates an opening, a vacuum, if you will, for entrepreneurs, challenging some of those incumbents. So it actually could lead to the next few years really some terrific years for entrepreneurs and terrific years for venture capitalists, if they're capitalizing on some of those opportunities, a little bit less competition, including from the incumbents, and they are smart about whatever capital they are able to raise to be more efficient around deploying that, taking a kind of long-term view, not just focusing on growth at all costs, but trying to grow the companies while also being responsible about managing expenditures.
Very interesting. Steve, you and I both live in the DC area, and you must take great pride in the number of former colleagues of yours at AOL who've gone on to found great companies in this city. A lot of people, rightfully so, have AOL as sort of ground zero for the tech community. Not that it didn't exist at all before AOL, of course, technology broadly defined, but so many companies that were founded as a result of great leaders who once were at AOL. I'm curious just your own sort of thoughts about the evolution of the tech community here in the district and the surrounding areas of Virginia and Maryland.
Well, I think it did inform a lot of my thinking around the rise of rest, and I think passion and empathy for the entrepreneurs in these other places, because as you were mentioning, when we were getting started in the 1980s, there were a lot of great things about DC, but at the time, there was not much of a startup community. There was not much in the way of venture capital. All the venture capital we raised came from other parts of the country, none of it from the DC area. The DC kind of region was really dominated by big companies that typically were government contractors, not seeing a lot of small companies emerge. So the fact that several decades later, it's a fairly vibrant startup ecosystem, and even Amazon picked it for its second headquarters, shows the progress this region has made, and also gives me hope and optimism for the progress other cities around the countries can make in this next phase, which is why I'm so passionate about Rise of the Rest, and even why I wrote the book, because I wanted people to hear these stories. Hopefully it will inspire some people who have ideas to start companies wherever they are, not feeling like since they're not in a place like Silicon Valley, they don't really have a shot. Hopefully it will inspire more investors to pay attention to what's happening in these different rising cities. Hopefully it will lead more people in those cities, the community leaders, the business leaders, the political leaders, to focus with more intentionality, more collaboration on what's happening in the startup community. If we can do all that, I think we can launch more companies that end up being some of the Fortune 500 companies of tomorrow, generate great investment returns, and also help renew these communities in terms of creating new vitality around some new companies and even potentially some new industries. And that also could be a way to help bridge some of the divides in this country, which is, there's obviously lots of different things that separate us, but one of them is an opportunity gap. And one way to close that opportunity gap, or at least in part close that opportunity gap, is to create more new companies that create more new jobs in more parts of the country.
Well, it's a terrific read. The book is Rise of the Rest: How Entrepreneurs in Surprising Places Are Building the New American Dream. Congratulations, Steve, on a great book. Congratulations even more so on the great work that you and your team are doing in fostering all that you've described across this country. It's a just fascinating work, and I'm so pleased to have spent a little time with you again today to hear more about all that you're driving. So thank you so much.
Thanks, Peter. It's great to be with you. Thanks for giving me an opportunity to tell the story, what's happening out there, and hopefully get others not just to read the book, but to do something to support this next chapter in the American story.